Hi, I'm Pete Andresen with Andresen and Associates, and I am posting this video in the midst of attending the Schwab Solutions virtual seminar. So it's been a busy week, learning lots of new ideas as we embrace this new digital world. While I've been doing this, I've also been doing some trading, you probably noticed, and I also have been receiving some economic data, and I wanted to share that with you. The big news is that the bull is back. The bull market is back in the Nasdaq, and we'll get into that. Nobody has a crystal ball. These are my opinions. Financial markets can go way, way down. My opinions in no way guarantee investment success, and perfection, so far as I know, is impossible. Now, the Nasdaq, that's tech stocks, basically, the high flying growth stocks. That index is still down about 19% from its high, which was reached very early in this 2022. But it is up 20% from its low, and that qualifies it as a bull market. We've had a wonderful recovery since the mid-June lows. People are pretty optimistic. Now, think about what would have happened if we had sold out at that stage because some clients wanted to do that. Think about that. Think about how much doom and gloom got put into the media that caused people to despair. I think the end of the world was nigh. It's wonderful. So staying invested and even buying as we have has been a very helpful process. Nobody knows what's really going to happen. Yesterday and today, we've had some inflation numbers that show that inflation may be moderating. That's relative. It's still very, very high, but it's down from last month, and that implies that it's not going into this chaotic free fall like Turkey or Argentina. So inflation's looking good. But here's the thing. This is what I really wanted to talk about. That we still have to deal with an inverse yield curve, and that is just getting more profound. This is a big indicator. That means that the 2-year Treasury has a higher interest rate than the 10-year Treasury. That's a big indicator historically because it presages recessions, although those recessions are usually 6 months to a year out there. We still don't know if we're going to avoid a recession. Recovery from the COVID experience may take longer than expected. That's usually the way abrupt change happens. If you think about 2008, if you think about COVID, if you think about the war on terror, when big change happens, it takes a while to figure it out, but often it takes longer than expected to deal with it. So a negative surprise in the short run is not necessarily bad even, might give us another buying opportunity, but it might happen. Meanwhile, many large cap stocks remain overvalued. This is the Shiller Cake PE. Some stocks remain undervalued. Those are especially value stocks. Those are small stocks. And so I'm still interested in those. I'm still hunting for bargains. But right now, large caps have not become a bargain at this time. That's usually the growth stocks, the hero stocks that made everyone rich in the last decade. Not a bargain yet. That implies that we shouldn't rush to buy those. Could be wrong though. Recently, Vanguard added its prediction for the coming decade. They upgraded it as of June 30th. And remember, June 30th was about 20% ago on the Nasdaq, so it's already altered. But look at the changes. The forecast for the 2021 year-end forecast predicted much lower decade-long performances, and now those are shifting upwards because of the market declines. But if you look, there's still some themes we want to keep foremost. Number one, bonds might make 4% a year. Worst case scenario, US equities make 3.4. So you're looking at the stock market outperforming bonds dramatically. Also, international stocks, if you look at that, outperform US stocks. Again, that's mostly because of the strong dollar. That's mostly because of undervaluations, because international stocks are down more. The big thing, though, is that this keeps us on the hunt for international stocks, not too much, just as a diversification, and it keeps us interested in small stocks as well. Now, I'm reading Gordon Prang's book, Miracle at Midway, and I'm also reading the novel by Jeff Shara, I guess his name is. That would be The Eagle's Claw, and that's also about Midway. And the thing about Midway was it happened on June 4th, 1942, about 6 months after the Pearl Harbor attack. Think about that change, how the world changed, how everything changed. Here you're seeing dauntless dive bombers going off to bomb the Hiryu, which was a Japanese carrier. And that's the cutting edge technology right there. That's what we sent to attack the best the Japanese had to offer. And yet it prevailed. And in 5 years, everyone was flying jets. So there's some themes here. There's some themes with COVID. There's some themes with the stock markets. There's some themes with Midway. And that is that change is the only real constant. We can expect big change. Liminality is when you are the new guy at school, when you're always uncertain and tentative because you're moving from change to change. That's normal. This feeling of uncertainty is in fact normal. But there are some themes that are constant. One of them is, what about those pilots? What about those gunners? They're heroes, aren't they? Because heroism doesn't change. Courage doesn't change. Forward thinking doesn't change. And likewise, the same themes exist in the financial markets. Invest now, be patient, diversify. Those themes remain constant. So that's what we're going to do. Thanks for your patience. Thanks for sharing this with me, and blessings.